thing on? Is this thing on? Is it working? Am I out there? Hi, everybody. Uncle Bruce here. Stock Markets with Bruce at on the open ocean here. Today I'm in the Strait of Madagascar. Oh my goodness gracious! Where the hell is that? You ask. Where the heck is the Strait of Madagascar? I mean, Jesus. And why are you in the Strait of Madagascar? Because weren't you supposed to be, going around the other side of Madagascar, Bruce? What's the dealio here with you? Well, what can I tell you? I'm doing the best I can with what I have. Apparently, there's a cyclone coming to Mauritius, which is on the other side of Madagascar, and it's going to get us. So I didn't want to get caught. Let me show you what I'm talking about. Hopefully this will work. We'll see if this pops up or not. There you go. Okay, there's the red circle there with that blue triangle. That's us. And you can see, looking at the tip of Africa, we went around the tip of Africa. We stopped in Cape Town, Port Elizabeth, Durban. And we were supposed to go sort of to the west here, to the east actually, to get to Mauritius on the other side of Madagascar. But we're now between Africa and Madagascar because the story goes that in a couple of days from now, a cyclone is going to visit Mauritius, and we're not going to be part of that. And so we're heading through the Strait of Madagascar to basically completely avoid this thing. It'll be underneath us and we'll be north of it. And I'm not sure if we're going to be stopping anywhere else on our journey until we get to ultimately Sri Lanka, just south of India. I really don't know if we're going to be able to do this or not. The captain is informing us as best as possible what is going to happen. They've been making inquiries over at the Cunard head office to let the world know, hey, we've got this big old cruise ship with 3,000 passengers kind of just rolling along, avoiding a cyclone. Can we stop in the Seychelles maybe and visit there? Look at this map here. Look at this picture. You can see where we came from the north there on the west side of Africa. Now we're on the east side of Africa. And instead of going to the east and towards Sri Lanka directly, we're going through the Strait of Madagascar. Now we have 9 days, 10 days to get there to be on time. And it won't take 10 days to get there, but anyway, that's what's happening here. We're going to see just where this takes us. Anyway, there's a little update for you as to where I am with Auntie Jen. We're alive, we're well, we're fine. We're watching the markets, of course, very, very closely. Keeping a eagle eye on SOFI, GameStop, Rocket Lab, all of our favorites, the markets in general, following all the news and what's going on, trying to figure out just what is happening. The big guessing game, of course, is if SOFI is going to go lower, how much lower will it go? This game started around the $25, $26 mark a couple of weeks ago. And a lot of wagers were made that as soon as the company comes out with their financials, what was it, last week, Friday, all will be well. The company will tell the world how much money they're making. They'll blow past all of their projections. They'll redo new financial estimates, which means they'll up their numbers. And they did. They blew their numbers out of the water. They upped their estimates, and the stock went down. Of course, the market went down, along with stocks like Microsoft took a real hit. Now we're watching Amazon take a shot, and a few others. There's all this so-called, I think it's an excuse to sell for some people. After all, we were near record highs, all-time record highs for the indexes. The market needed a reason to sell. And one way to do it is to blame it on stocks priced to perfection as a whole market. Or you find an excuse why you should sell stock and shift your assets around. And some people thought, well, I'll just buy into gold and silver because it's really rocking and rolling. Although that is a trade you do when things go bad. things actually aren't bad. Or you get out of cryptos and go elsewhere, or you just decide, I'm going to sell the highfalutin Magnificent Sevens and shift elsewhere. But everything went down. It wasn't the Magnificent Sevens only that drifted lower or got hit somewhat. It's everywhere else, including SoFi, but excluding GameStop. Have you noticed how GameStop is not at $15 or $16 or $17? Have you noticed that GameStop was at $20, $21 about 2-3 weeks ago? And where's GameStop now? 23, even up to 25 the other day. I know you guys noticed because you watch GameStop as I. Why is that happening? Because GameStop is worth $10 billion in cash, and the stock is worth market cap is $10 billion right now at $21 a share. So there's no premium on GameStop share. But why is SoFi down here? I'm showing it right now in the pre-market at $19.89, down 43 cents, up 43 cents on the session. Pre-market, of course, with volumes of only 800,000. I did notice last night 4.6 million traded in the aftermarket, and as low as 18.40 a share at one point yesterday evening. But I haven't seen those prices yet today. Of course, the Qs are up this morning. They're performing a little bit better. And again, that to me, what's happening here is markets are reacting to an oversold market. Might be a dead cat bounce. Maybe we lose all this momentum in the first hour of trading or two. On the other hand, I have seen every scenario in my 50 years of following this market. I've seen them all where we've had day after day after day after day after day of selling with false rallies, and no sustained rally until we oversell. Maybe that was last night in the aftermarket because the Qs were down $5 or $6 last night, down to something like $5.93.94, if I'm not mistaken. Maybe even $5.90 last night. And the Qs right now are up $363 to $600.66. I've seen scenarios where the next day the market opens up tentatively with a little bit of a pop-up, not to be no surprise, and then there's an attempted backing off, and there's just no appetite for people who want to sell anymore because they've sold what they wanted to sell. They sold what they had to sell. They were forced out of margin calls. There's no selling left. And people look at stock like SoFi and go, well, wait a minute. At $32, the company was rocking and rolling on the cusp of S&P 500 inclusion when you think about market cap values. SoFi's earnings were coming out. They came out. They were phenomenal. Then the stock went down to 27 when they did their financing. By the way, doesn't that financing look good now? The so-called diluting of SoFi at $27.50 a share. Doesn't that deal look smart? Doesn't Anthony Noto look like a freaking genius right now at $19.60 a share, having sold $1.7 billion worth of stock from the Treasury at $27.50? Does that guy now deserve a little? Hey, that was pretty good. That was $8 higher than where we're at. That's pretty good, I would say. In any event, here we are at 1961. We were down to 25 after earnings, 24, then 23, then 22, and 21. Hey, I think $25 is cheap for this stock. I think $27.50 is still reasonable for this stock. It's 1961, 1970, something like that. It's kind of on sale. Theoretically, those who sold SoFi and thought it was overpriced, or were told it was overpriced, or some institutions who decided to unload some of their positions, rightly or wrongly, they did what they did. They might be all done their selling. Maybe they're finished. Maybe the stock in the after hours down to 18 something was an overdone reaction, and here all morning we've been, even over 20 this morning. Is it possible that we maybe go back into the 19 range and then we shoot to 22, 23 today or Monday or Tuesday? Wouldn't surprise me in the least. I'm actually afraid of SoFi going up $10 rather than going down $2 or $3 more. I will accept it if it does happen. You have to accept it. That's what you can do. If SoFi wants to go down to 17, 1650, 1750, 18, you got to let sellers sell. But on the other hand, don't be shocked if an intraday turnaround happens at any time, an overnight or pre-market shoot comes out and it just shoots up $2 in a pre-open. Do not be surprised if the shares reverse themselves within a 48-hour trading window from the 19 range to the 23, 24 range. And from there, they're going to go higher. They're going to go up to $30 because what analysts have reluctantly agreed and have reluctantly admitted is that the company is reported 18% net margins on their gross revenues in the last quarter, and that those margins are improving because remember, all the setup costs that SoFi had to pay 4 or 5 years ago, they've all been spent. Everything is set up. They can now add 5 million members at no extra cost to running the company. Hi, Auntie Jen.
Are you talking to yourself?
I'm talking to myself. I'm sitting in a room, just talking to myself.
Just talking to yourself.
Yeah. Well, there's a few friends here.
Okay.
I see about 97 friends here.
Oh, hi.
There we are. There. Hello. Yeah. Welcome. There. Oh, look at that.
Oh, no.
You want to show off your
I was
T-shirt?
going to show off my T-shirt.
Oh, you can't do it. You can't do it without revealing yourself.
Can you turn around behind you and hand me that program?
Well, I could try. Do you
was-
mean this
Yes.
program?
There was much talk about where do we think we're going to stop.
Okay. Anyway, I was just saying to the kids. Let me just. Okay. Here we go.
Okay.
Here we go. Here's a
What
T-shirt.
can you see?
See, Alberta, Canada T-shirt. You can see the whole thing. Look at that. Yeah, right on, Eddie Jen.
I'm sorry. I advertise as I go.
She's advertising. So she'll take.
Alberta.
She'll take all donations. She's buying. Wine and beer and whatever in the bar.
So humid today.
It's so humid. Anyway, look, the margins on SoFi are 18% and climbing. I think they're going to be over 20% by the end of this current year. I'm so far finding that 4.6 million is the estimated sales that the company has admitted to. I don't think so. I think it's going to be over 5 billion, and it might be 6 billion in actual fact. And at 20% margin, you have a $1.2 billion profit corporation through 2026. Into 27, it's going to be 7 to 8 billion in sales. It's going to be 22 to 23% margins. We're going to be seeing 2 to 2.5 billion in net profits. And that, my friends, is $2.50 a share in net profit, approximate upside, my opinion. $2.50 a share upside in a year from now. This is a $19 stock. Are you kidding me? This is a $50 to $100 stock, between 20 and 40 times earnings because of the growth curve that is ongoing. This sucker is on sale like you cannot believe. But hey, many of you know that you believe in the cause. I wouldn't be surprised to see Anthony Noto buy stock on the open market. I'm waiting to see if ARK Investments does Kathy Woods buy up 1 million shares or 2 million shares at these cheap prices. What about our friends at GameStop? Wouldn't that be something if finally Mr. Cohen would listen to what I have to say about buying up some SoFi? This would be a really smart time to use a couple of $1 billion and buy 100 million shares of SoFi for $1.9 billion or approximately, and take an 8% ownership in the bank. Why shouldn't GameStop do that? They'd still have 8 billion lying around to do whatever. But I'm just a guy. Okay, I'm just a guy in front of a computer on a cruise ship that's been diverted because of a cyclone. What the hell do I know? I'm just a guy. But option-wise, there are opportunities out there, my children. There are some opportunities for you to write $20 cash secured puts, 22s, 23s, 24s, 25s, 26, 7, 8, 9, 30s. You can write cash secured puts for a month, 2 months, 4 months, 6 months, a year, depending on how far out you want to go. You put up $2,000, you can write a cash secured put on SoFi and write a 25 you'll get 500 plus premium. You might get your hands on for a 6-month contract. How much money? Can you get your hands on? I don't know, $600-700. If you get your hands on 700 for a $2,000 commitment, I think that's not a bad return. 35% for what, through 2 months, 3 months, 4 months, 5 months. Can you get your hands on $8 on a 26 maybe? Of course, if you write a 25, you have to forgive me. You have to put a 2,500 to get the return. But hey, there's opportunities here in this world to take advantage of some dough here. But hey, I'm just again a guy who's sitting here going, man, I like this game. I like the idea of $16 to $18 put credit spreads. I like the idea, even if they're out a month or two. I see opportunities galore. The stock pops to 25 and a month or two from now on a partial recovery. Any cash secured puts you're writing at 25 will be virtually worthless. You'll keep all the money. Any credit spreads you do, 16, 18, 17, 19s, 18, 19s, 15, 16s. I mean, depending on the premium you can get, depending how far out you go, those contracts are worthless. Keep all the money. You just take advantage of where we're at and know deep down that this company is a huge moneymaker right now, and it is really growing. And you're just going to take advantage of the recovery. When it comes, and it'll be brutal, and it'll be brutally fast. And we've seen this game before. Another game you can play, again, if you're looking for suggestions on how to play this market, you could go out there and buy deep in the money calls that expire in 2027, 2028. Go way out there. Go after 10s. Can you get 10s for like 11 or less? Can you get them for even 11.50? And then you can write 2-3 month out calls on $11.50 calls. Bring in $3 on an $11.50 buy. There's a nice little hit for a 2 or 3 month deal. Writing an out of the money contract. I like this game. Again, you have to decide for yourself if you want to do that. Anyway, all kinds of ways to play it. If you want to learn how to do option writing, you know where to go. My website, stockmarkerswithbruce.ca. It's the place where you can get your hands on the lessons you need to become an option writer. There it is, stockmarkerswithbruce.ca. Is it time now to invest in yourself? Oh, is it ever? If there's ever a time you should be learning how to write options, this is it. You can write credit spreads on Google, Amazon, Apple, NVIDIA, Amazon. You can write credit spreads on Rocket Lab. You can do, like I'm talking, put credit spreads behind the market with a month or less to go. We're talking all kinds of opportunities here where you can pick some targets nicely behind these stocks. A company sitting with nothing but cash, making nothing but a bunch of money. Palantir, you can do $5 credit spreads, $3 credit spreads, $2 credit spreads, $10 credit spreads. How much capital you have, how comfortable are you? If you know how to do it, if you've taken these lessons here, one lesson, $200. Go to my website, look at the lessons that will show you which is which, and you can do the cash secured put lesson, you can do the credit spread lesson, you can do the poor man covered call lesson. $200 is what's going to cost you, and you're not going to make less than $200 on one of these positions, or 10 or 5 or 50, whatever opportunity knocks. But you've got to step up, kids, and take advantage of this gift that is being given to you. Now, for some of you, I have some other advice. Some of you out there are long SOFI shares, you're long Rocket Lab, you're long other stocks, or you've already done cash secured put writing on some of these different stocks. You've written cash secured puts, but you find that your margins are pretty high right now, and you can't really do anything. There's another way to play this game to help you out a little bit, and that would mean buying puts against puts you've written. For example, let's say you wrote some, let's say you wrote a $25 cash secured put on SOFI that expires in January next year, Jan 27. It doesn't matter. But let's just use that example. You could buy a January 2027 put for every put you wrote behind the strike price that you wrote. For example, you wrote the 25s, you could buy the 20s, for example. So if you wrote 5 25s, if you buy 5 $20 puts in its place, you will in effect create a credit spread, a put credit spread. And as the shares, again, I'm assuming in a few months from now, weeks from now, days from now, these are contracts till January 27. If in the next month or 2 or 3, the stock comes back to 23, 25, 27, those puts, all of them are worthless because, of course, the higher the stock goes, the puts go down in value. You'll now enjoy the credit spread profit, but you're taking off the margin requirement on the puts you wrote. If you wrote 4 $25 puts, that's $100,000 that you've used up to do it. If I got my math right, no, if I got my math wrong, It's a 2,500 up position. So $10,000 was margin required to write 4 cash secured puts. If you buy 4 puts instead against them to create the spread, that $10,000 margin requirement is eliminated. It is now replaced with a $2,000 margin requirement on a $5 spread if you buy 20s versus 25s that you've written already. If you've written $20 cash secured puts, and this is kind of, we're 1987 here, and you buy $18 puts, for example, the same expiry date, just lower strike, that's a $2 spread. And that's $200 a contract. So if you've written 10 cash secured puts at 20, and you now buy 10 $18 puts to offset against the $20 puts you've written, you've turned a $20,000 requirement into a $2,000 requirement in margin. Again, depending on your broker. Now, some of you are able to do probably pretend trades through your practice accounts, or some of you out there can enter an order or create an order, like a buy order for puts, without executing it, and the brokerage firm will tell you how much margin is required to do that trade. But the key here is, I believe, and I've had a client or two do this already, by buying puts against cash secured puts you've done, you're lessening your margin requirements to carry the position. Just to give you a heads up on that. Again, check into that and let me, if you have any questions, let me know on that. Yes, you are. Now, another trick you can use to protect yourself, for example, if you're long stock in SOFI and it's come down here to 1985, of course, and you're worried about downside from here, what if they go to $17 in the next 2 or 3 days on another sell-off? We don't know. We never know. You could buy literally just puts against your stock. So if you've got stock and you've written call options against them, you've written, say, $30 calls, and they've crapped out, you now have bought those back for way less than you sold them for, and you wrote 26s and they've crapped out, and now you've written 24s and they're crapping out, but you're not too sure about writing 22s because the stock can bounce back at any time. The theory then is you're still worried about a downside move. You could buy short-term, say 2-week, 3-week, 4-week lifespan put contracts as a buy, as insurance. So if you have 1,000 shares, for example, if you buy 10 puts that are, say, $18 puts, they're $1.80 out of the market right now, or $19 puts behind the market, but with only 3 weeks to go, they shouldn't be too expensive. And if the stock does drop to $17.50, $17, those will have a doubling or 2.5 times their value. In effect, that'll compensate you for losses on your stock. Now, another strategy people employ is they'll have 1,000 shares that they're long, and they're going to buy 20 or 30 puts instead of 10. 10 puts equals 1,000 shares. 30 puts equals 3,000 shares. And if the shares drop in price $2.50, you've got a tripling of a gain on the puts versus a 1/3 loss on the stock. So if the stock loses $2.50, the options could make you 7,500 on the other side, which compensates you for the 2,500 you're losing, and it gives you another theoretical $5,000 profit, which also you think about goes, well, that gives me $5 back on my loss of the stock from 1985 to 24.85. There are people who short-term trades like that. You go down. So another strategy is you do buy puts. They go from $1 to say 250. Let's just see theoretically. You sell them at 250, and you buy new puts at a lower strike for $1 again, and you pocket the $1.50 in cash. You keep it off to the side. So you now took some dough off the table, reloaded on additional puts in case there's another drop, and you take advantage of that. Again, these are day trading strategies that some of you might be able to employ, and you have to really be in front of your computer. For the rest of you out there who are long-termers, you're just going, Bruce, look, I've got my stock. I bought it. I followed you in 21, 2022, 2023. I got a $6 average. I got an $8 average. I got a $12 average. I got a $14 average. I'm never selling this stuff. You're holding on to it. You've written calls. You wrote 30s, 32s, and then you rolled back and you rolled back. Keep rolling back, but also coming in time. So if you originally wrote January 27 30s and you bought them, you can buy them back, or 25s, let's say, I would recommend you buy them back and write 23s, but only 6 months out, not a year out. Bring the calendar into you as well as the stock backs off. You can play that game too. Again, look at your option chain and check it out. A couple of thoughts, a couple of pieces of advice, just from a guy in front of a computer. Waverly, good morning. Richard Carlin, hello there. Juan, welcome. Richard Carlin Arias, a computer whiz. Eddie Martin, Mandu number 5. Robert Melhout, they're all here. Dude is here. Say hi to me, guys. I don't know who this is. Bobby is here. Steve is here. Like the stock is here. Robert, thank you. Bobby, hello. Who else? John. Here's Bobby saying, was looking at rolling January 27.30 cash secured puts to January 28.30s, almost 150 increase in premium. Well, another strategy would be you could go from Jan 27s to 30s to Jan 27 35s and take another $5, but that's going to cost you 500 more. This move on 30-30, I understand what you're saying here. You don't have to put up any more money. It's not a lot more money though, in reality. And Jennifer's in the house. Juan is saying, computer was hello. Walter Young, good morning. Eddie Martin, you're just a guy. I'm just a guy. Chain lowest is 15 strike for a poor man cover calls Jan 2028. There you go. So you may have to look at 2027 contracts. Again, Jan 27s, can you get your hands on 10s, 8s, 10s, 11s, 12s in that range? I don't know. I'm writing in the money puts, says Nizan. Charlie, hello, Uncle Bruce. Good morning to all. Rocketeer, morning, Uncle Bruce. Hope the cruise is awesome so far. Hector, good morning. Jen doesn't know, but I did show everybody the map of where we are and how we've been diverted. And so now Jen's aware that you're aware that we have been.
Do we know where we're going now?
We don't. I don't know where we're going.
No, I don't.
No. We're waiting for our captain to tell us where we're actually going to go for any kind of a land stop, and he's waiting for Cunard head office to let him know if there's anywhere else we will stop. Otherwise, we'll just stay at sea and work our way to Sri Lanka on a slow boat to China. And the weather out here is gorgeous. We have no serious waves. We have no serious winds. We have clear blue skies because we're avoiding the cyclone. And so we're doing just fine. Again, welcome all. Have you checked out my poll question of the day? If you can get a chance to answer the poll question, give it a shot. Let me know. I would appreciate that. It looks like 20, what do we got here? I don't know how many answers we got. 26 votes on one of my formats to the question. I've been taking advantage of the SOFI price drop to average down and right options. People are saying yes, 38%, no, 62%. Over on the other format, the horizontal format, 57 results. 54% say yes, I have, and 45% say no, I haven't. So there you go. Some people do this, some people don't. Again,
Canada won its first curling
Oh, that's good news. Canada won its first curling game. Fantastic. That will add mightily to this channel's performance. Give us a thumbs up if you like that news. Fantastic. Welcome all of you to the program. Ooh, we're playing Great Britain next. Ooh, easy pickings, I would think. Who knows? Thank you all for joining me this morning for this impromptu live show. What is going on with SoFi, GameStop, and everybody else? We have 25 thumbs ups now on the horizontal format of this show. Thank you all for the thumbs ups. If you can find the thumbs up button on the vertical format, help us out with that. I appreciate it. Also, answer the poll question if you can. And also, tell me, where are you watching me from today? We are in the Strait of Madagascar. Where are you? By all means, let us in on that information. Thank you all for popping by and saying hi to us as we're at sea watching the markets from afar. Thank you all. All right, let's go back over to here. There we are. Folks are saying hello, hello, hello. Thank you all. Good morning from Hector this morning. Ricardo, curling, yes, just like the old days. Gourmez, Australia, buddy. I'm in Australia. Eddie Martin, I'm in Nebraska, Bruce. I'm watching from Nebraska. 1989 is where SoFi is right now, up about 43 cents. We did break over 20 already today. We did get up to about 2005, 2010 for a little bit of time, maybe about 45 minutes, about an hour ago. It wouldn't take much for this stock to rally into the 2050, 21 range at all. It really wouldn't take much. It's a question of the entire overall markets. How are they going to do? Because a lot of folks are watching, every other stock. Mr. Yates, green shoots everywhere this morning. I am dipping in my toast. John Talks says, hey, Uncle Bruce, watching from Phuket, Thailand. Evening to you and Jen. Thank you. Jeff Glass, dying already 30 minutes behind, catching up at double the speed, says Jeff Glass. Derek, is that a lamp I see behind you? There's no lamps here. There are never lamps in rooms that Jen and I hang out in. There are just no such thing as lamps. And even if there were, they wouldn't be here. They wouldn't be lit, and they wouldn't be crooked or straight or anything like that. So I can't imagine there'd be a lamp behind it. I see the Q's up 409 to 601.12. So they're doing all right. They were up to 602 for a while, and I noticed them last night at 590 in the after hours. So this is a tremendous turnaround. 1989 has been the latest indicated price on SoFi. We'll be watching that as we move forward in time. We'll take it one step at a time. All right, comments coming through. Let's see. Thank you all. Boeing Tiger, good morning, everyone. Mr. Bruce, it's good to see you again. Nice to be seen. Mojo, what a family. Mr. Yates, IREN is a buy. There's a lot of buys out there right now. And Flint Creek Soap Company, the official soap company of this channel. Good morning. Welcome to you. Nice to see you here. I see 910,000 approximately traded on SoFi today, according to MarketWatch. I'm imagining if we see the trading volume on CNBC, pre-market might be over 1 million by now. I can't be 100% sure. But we will see. I did see something somewhere. There was a report that an insider filed a buy report on SoFi. It wasn't Anthony Noto. It might have been one of the directors or one of the officers. It wasn't much. It was a 5,000 share buy at 1993. That was disclosed in a filing, an SEC filing. And that popped up, I think, last night. Take it for what it's worth. I would love to see, like I say, I would love to see Kathy Wood's fund announce a purchase. I would love to see any activist investors make a purchase here. I mean, 1989 on SoFi, this year at 60 cents a share profit, easily this year. This stock is now 34 times earnings with a 30% growth curve. and margins improving, this sucker should be trading at 50, 60 times earnings. That should be $30, $35 minimum just on this year's earnings. On next year's earnings, which a lot of stocks actually trade on, PE multiple of next year's projected earnings, this stock is at 19 times earnings if it's $1 a share. So yeah, we are cheap. 19.90 on SOFI right at the moment. Jeff Glass, I've been assigned 800 shares of SOFI this week. Rolling didn't seem to make sense. The amount of time to recover premium with time just didn't matter. So I will take it reasonable. I believe in SOFI as a company, so figure there'll be a price recovery. I'll do better just taking the shares. So there you are. Again, you could sell the shares and write cash secured puts. You could write 20s, you could write 22s, you could write 25s. You could theoretically use the margin of your stock to write cash secured puts. You could use the margin of your stock to write credit spreads behind the market. Again, up to you how you want to play it. Of course, you can write covered calls on these shares. I mean, you have a lot of choices here to go with. It's totally up to you how you want to proceed. But long-time believers in SOFI, it doesn't matter where the shares are, you're always writing, and you're always going to find ways to write and bring in credit, bring in gamblers' money and shift the risk over to them. There you go. Okay. Yes, Johns is saying 5,000 shares were purchased by Eric Schopenhauer at 1993. The other, just I think yesterday. So there you go. I think though, if you buy 1,000 shares at 1993, it's $19,000. Am I correct in that? Yeah, and so this is what, $100,000? No, yeah, $100,000 purchase. No, $10,000 purchase. Where am I missing? It's 100,000. I can't do my math today. Decimal points and zeros getting in the way. Is this the sell of really? Is this sell of really because of the new Fed chair? No. People are using an excuse of anything they can find to say why. I just think that the market's hitting new all-time highs in the last few months through year end. Started it off, and now here we are into February, and we're repositioning here yet again. Now, I will admit that there's a lot of talk out there about how much money Google, Amazon, Apple, not so much, but NVIDIA and others have to spend to build out their AI platforms. We're talking collectively, when you take the top 20 companies in this business, we're talking $1 trillion of capital that will have to be put in. But what the market doesn't seem to want to pay attention to is we're talking about a 10-year build out. You don't build an AI platform from 0 to 60 miles an hour in 1 year, 1 quarter. This is the 10-year build out. In other words, if you're going to raise $1 trillion or put $1 trillion into this business, and $500 billion is your profit cash flows that you can put in on your own, you only have to borrow $500 billion over 10 years, not all at once either. It's a $50 billion investment per year by the industry. This is a nothing burger. But for whatever reason, the market isn't, the analysts are not focusing on that. They're talking about the big number to try to kind of spectacularize it all and get their share of eyeballs reading their articles. But hey, I'm just a guy, just a guy. Johns, is this, I'll be assigned 2,000 shares today, puts below $23 strike price. Oh, well, there you go. Like I say, you've got a lot of opportunities to turn around and make your next move. Anyway, I'm excited about the AI thing coming up. I'm glad that we have something to shoot forward to. I think companies like SOFI and GameStop will be able to take advantage of this new technology, new investment opportunities, new ways of doing business at a much cheaper price. I think for SOFI, a fintech company, AI intelligent software that helps them be better lenders, helps them become better creators of new product. Win-win, man. They're going to run their corporation with fewer human beings. Cheaper price to run SOFI, as if it isn't cheaper than a standard street bank as it is. This is fantastic news for companies like SoFi. GameStop, they're going to be making investments in all kinds of new opportunities in AI. I'm very positive about it. I'm just a guy in front of a computer that's a fan of, I think, what's coming up. Whereas the street out there, for whatever reason, a lot of people are worried about losing their day jobs. Well, if you're a prolific option writer or going to become one, you've taken my classes, you're taking them now, and you're building your knowledge base. You're going to be a self-employed option writer forever. You're never going to need a day job. I mean, to be able to make $100,000 a year writing options means you need to make $2,000 a week in profits on option writing. You can do that with $100,000, $200,000. No big deal. The depreciation of some of these contracts are fantastic. You can do very conservative option writing programs and say, "Thank you, sir. May I have another?" But you must be willing to tolerate market gyrations. And if you find that market gyrations that go down cost you a lot more money than when market gyrations go up, or you make less and lose more, you are too close to the market. You are just too close to the action. You're too close to the fire. And you have strategies that are only going one way instead of two ways. If you're writing iron condors on SoFi for the last several months, your iron condors have paid you handsomely on the call side, because the stocks have gone down and down and down and down. And you've rolled your puts and you've re-rolled your calls to take the cash in. And you're going to keep on doing that. And you can do this with Apple stock and Microsoft and Google and Palantir and Rocket Lab and ASTS and whatever your favorites are. You can do condor trades where it's credit spreads on both sides, and you control how much you risk at the trade. If it's a $3 spread, you're risking $300. That's all there is. John Munoz, thank you so much for the PayPal donation. Just came through. In the middle of the ocean, we get these alerts. I thank you, and any and all of you who are kind enough to do a donation. This helps towards our Diet Coke tab every day when we play trivia every morning downstairs. We usually order a couple of Diet Cokes at the table. This will cover some of that. We appreciate you. Thank you very much. More than love it. John's would like to close above $20 at least to close out the week. Well, as I say, we might not. We might be in the 19 level. We might be at $22 late tonight. The thing I fear, I'll come back to the fear I have for SoFi. I don't fear it going to $17 or $18. I don't worry about that, because I know the future of this company overall. I know the big picture. What I worry about is a $5 snap recovery in one or two trading sessions, and it goes from $19.90, $20 to $25, and all those dollars were lost on an up move that you could have taken advantage of. That's what I worry about. I don't see it in trouble in any sense. I see a company that has now 13.5 million members. They added 1 million members in the last 3 months. That's 10,000 members a day joining SoFi. 10,000 a day, 7 days a week. That's how they're growing this business. This is mega huge. They will reach easily the Costco number. They will reach Costco membership levels, which I think is over 50 million, might be over 80 million members. They're at 13 million out of 400 million Americans, 250 million adults, whatever that number. They got nothing. It's a nothing burger so far. This growth side, 20 times growth from here is certainly doable on a cash flow basis. Membership growth could be, oh my God, a factor of 6 more, 70, 80 million members. Phenomenal. Absolutely phenomenal. I don't believe Auntie Jen orders Diet Coke. Actually, in the morning she does. We'll enjoy a Diet Coke together, play our trivia game, and then we'll play cards for a little while and watch the sea out of our window here. Enjoy that, and then get ready for the pre-markets and see what's going on. Giddy up, you guys. I'm excited, but you got to go with the flow. You got to take the ups and downs, but SoFi has unbelievable upside to it. You all know $32 and 73 cents is the all-time high, and it will set a new all-time high probably before the end of this year. And so if you believe that by the end of this year it'll break 32.73, $19.87 should be the bargain of a lifetime. And if you're going to buy deep in the money calls, $10 strikes, good for Jan 27 or as far as you can go. And this sucker goes up to 32.87 or beyond, your $10 strikes will be worth $22.87 each. You'll double your money on your strikes, on your long calls that you're writing calls on. Oh my God, the money you can make. Unbelievable. There you go, option writers. Take advantage. 1994 right now on SOFI as we reapproach $20 this morning as it fluctuates back and forth and back now in the opening. It is what it is. Where in the world is Uncle B? That is the question. I'll show you where we are. We're right here. Let's pop this little image up right now, and you can see where we're at. Let's see if I can get this to disappear. There you go. Don't mind me here as I try to set this up. There we go. There we are there, and take the banner off of there. There we go. Boop. There we are. That round red circle at the near the bottom end of Africa there on the east side, that is us. And right now we're in between the coast of East Africa and the island, a nation of Madagascar, the island there. That is where we are right at the moment. We're heading north. We'll zoom in a little bit more for you, show you this image if we can. There we are. We're heading north right now, a little bit east, as we avoid the east side of Madagascar. You'll notice on the far right of the photo, you'll see Mauritius, a little green dot over there. That is Mauritius. That's where we were supposed to be in 2 days, but we're not going to visit Mauritius. We're going to continue through the Strait of Madagascar right here, and we'll probably end up in the Seychelles. I do not know if we're going to stop there or pause there. I have no idea, but right now the captain is working all the weather reports and making sure that we stay in the calm waters and avoid everything east of Madagascar, which is right now threatened by a major cyclone that is going to cross right over Madagascar, probably the southern half of Madagascar. We'll be north of Madagascar by the time the storm arrives. We'll be past it and beyond it, and hopefully in calm weather the entire time. All right, everybody? Giddy up, everybody. Good morning from the USA. Manuel asks and says, margin call. I took advantage. I wrote 20, and then the price dipped some more. Margin called. Hey, Uncle B, Gormes. Durban, we did Durban. John's cool, Bruce, Gormes. Be sure to visit Spur. Gormes, tell them it's your birthday. Ray Sherlock. Hey, hi, Bruce. Choice paralysis here. SOFI, cash puts leaps, or just buying 10 shares. You decide which way you want to go in this. Lisa, this week has been scary. Felt worse than the Trump tariff day. But we didn't go down like the Trump tariff day, did we? SOFI, remember SOFI went down to $10 on Trump tariff day. That was an unbelievable run. Here we're at 1984. This stock is reluctant to go lower. It's actually up 38 cents on the morning here in the pre-market. The question is, do we open at this level? Do we open right at 20 something? Do we go right to 21.50 right away? Do we stay there all day? Do we come back? Do we open at 1920, 1980 and go down to 1880 and then work our way back? We're going to be probably all over the place, so we'll be watching that. Are you on a cruise? Jeff wants to know. Ray 100, I don't know what 100 means, but thank you all for being here. Thank you all. If you're hitting the if you're watching this show, please try to take a shot at my poll question of the day. 33 of you have answered the poll question on the vertical format here. 55% of you are saying have not taken advantage of the price dip to make any adjustments. 45% of you say I have. I've done some averaging down and some other option rights. Over on the horizontal format here, we have 76 answers to the trivia question. 55% of you are saying, yeah, we are doing some moves here, Bruce. Definitely taking advantage of the cheap stock. We're definitely making some option moves. And we're saying, thank you, sir. May we have another. There you go. Thank you again for those of you who have been hitting the thumbs up button for us. We appreciate that. If you can throw us a thumbs up, that would be terrific. Gives the channel a little bit of additional momentum and a bit more street cred with the YouTube hierarchy out there. Let's see if we can put that through here. We've got, I've got ads showing on my screen here whenever I reload or refresh my screen. We're actually inside the German YouTube connection right now. So I get German ads. 43 thumbs ups right now on the horizontal format. Thank you for these thumbs ups, guys. If you can find a thumbs up on the vertical side, you're able to find that button, that would be terrific. I see the stock jumping around here on SOFI. I don't know what quote to believe. I honestly don't know. One trade will show an $18 trade. One trade will show a $20 trade. And then I see trades around 1980 to 1990. I have no idea who to believe and why to believe them. But you know, it is what it is, and we're just staying here and watching the action take place, as we're still a few hours away from opening up on the day today. Do not be surprised if we get all kinds of crazy trading action out there. You'll have to watch the Qs. You'll have to watch the futures trading on the Dow and the NASDAQ and the S&P. You're going to have to watch the trading on the Magnificent Sevens to see how they're performing and behaving and how they're reacting. And we'll see what goes. Okay. Apparently, John's is saying at 1856 there's huge support. Murray, hi Bruce, your beard is really getting there. Hostergaard, what's the outlook for Rocket Lab for the end of the month? Johns, can you trade in the sub? And Computer Whiz 1981 at the moment. There you are. Yeah, all kinds of stuff going on. Rocket Lab, I don't know where it's going to end up. I read articles that are glowing reports, fantastic news. Then I read, stories on SpaceX, and they're trying to get all kinds of coverage. I honestly don't know. I just see the stock, running everywhere, all the way up to the 90s and the 60s and everything in between. It's been wild. It's one of those stocks where you can always decide, I'm just going to buy some deep in the money calls on Rocket Lab and write calls against it, or I'm just going to do credit spreads. I'm going to do iron condors, $10 ahead, $10 behind, $5 spread. I'll do 5 of each, and $2,500 position, $2,500 risk, and I'll try to play the percentage. Again, you have to decide for yourself if Rocket Lab works for you or not. John's is saying, I've given up on it. He says, I bought some ETHA yesterday. Love losing money. There you go. There you go. Again, you got to decide also, has Microsoft dropped enough? Has Microsoft gone down far enough now that it is no longer, a stock that is vulnerable to massive sell-offs anymore? Is it the kind of stock that you can now sort of, do credit spreads on, put credit spreads, or do you want to do call credit spreads on Microsoft? 398.53 this morning, 485 higher, but it lost $20.50 yesterday, down to 393.67. So you got to ask yourself about that. Rocket Lab is up 220. Speaking of Rocket Lab, 68.56. Yeah, I don't know. Hard to tell in this volatile market. Tesla sitting around 400 right now, up $3 today. Nvidia up $5, 176.90. Amazon looks like it's down $18 after coming up with fantastic earnings, but a $200 billion estimate of investment they're going to make into their business. To me, at 205.06, Amazon to me is a wonderful long-term hold, but hey, can you afford to buy this stuff at these prices, or can you play 180, 185 credit spreads, put credit spreads on it? Are you comfortable doing that? Or are you more comfortable doing 170, 75s maybe a month out? Are you comfortable doing 160, 65 credit spreads 3 months out? You got to decide for yourself whether you want to even entertain anything like that. It's a $2.38 trillion company, and its PE multiple is quickly approaching 30. So, these aren't as expensive as they used to be, are they? 1977 to 1980 looks like is where SOFI is right now, with about 1 million shares going through, give or take. I'm not 100% sure on that. We'll see how see how it goes. We'll just kind of follow. Anyway, there it is. And Citizen Jack says, the market's going to go higher today. It's finally going to bounce today because I was finally forced to sell. I expected to bounce big time now, immediately after I sell stock. So there you go. Well, Citizen Jack, you check out what you need to do. Iron condors might be where you want to be on both sides of a market, way ahead and way behind it. But you decide on your own which way it is to work it. Thank you again, everyone, for reaching out to Jen and I from time to time. You send us emails, send us messages, hi, hellos. We do appreciate it. If any of you are in need of one-on-one situations, you want to do a one-on-one consultation, I'm available for those. Just send me an email and we'll see if we can get together. WC, hello, Uncle Bruce. John's is saying thank you. You got it, buddy. Like I said, we'll try to find an hour where we can get together and have a chat. Weekends might be the best place to do it. It gives you time and me time to find the best time to get together and go from there. Take care and safe travels. Thank you, John. All the best to all of you. Citizen Jack, I should have sold everything in September. That's what I should have done. Shoulda, woulda, coulda. It's time to get back to work and make money. Start writing options and make money from writing options. No matter where the markets are, you're always going to be a writer. That is how you play this game, my friends. Thank you again for answering the poll question. Thanks for the thumbs ups. Thank you for the shout outs. Make yourself some dough today. Don't let these down markets get you down. This is just part of the game. And if you're an option writer and you're a cash secured put writer, you're sitting on a mountain of money, and that is where you want to be. I think that's where you want to be. Anybody have questions on what's going on? Send me an email, and we'll try to keep an eye on things from there. In the meantime, keep smiling, everybody. Jen and I will continue to cruise along here at about 20 miles an hour on the open seas as we're heading north between Africa and Madagascar, avoiding a cyclone. Thank you, everyone, for your support and kind and best wishes. All the best to you. Have a great weekend coming up, and we'll see how it all runs today and next week. Jen, are you ready to say goodbye to everybody?
Ready.
Okay, we'll talk to you soon. Bye.
Bye.